In today's video, we're going to talk a little bit about timing again. Now, everybody knows that I had a really nice confluence of timing cycles, the weeks ending the 13th through the 20th. And this week, the week ending the 27th, I believe, is still within the time window for a possible intermediate high to unfold. Does that mean it's going to happen? No. But are we still going to watch this? Absolutely. But in the meantime, we've had some shorter term sell setups when we initially had tested resistance. And then we saw a buy setup like this one recently that was simply set up off of the symmetry of this prior decline and an extension of this low to high swing. This was one of the ones that we had looked at in the trading room, and we have met multiple targets off of this one. So yes, you're still going to watch for the time and price resistance and be aware of that, but you're not going to short the market unless you see sell triggers, and we have not seen sell triggers. So don't get confused with the timing work. Don't make the assumption that it's definitely going to kick in, because we don't know that yet. We're just going to watch till the end of this week, which is still the time window. But if we don't see reversal signals, we're not going to take those trades. Now, are there reasons to ratchet up stops if you're long? Absolutely. We've got the next weekly resistance decision that we're testing on the S&P continuous chart. You also have some of the weekly resistance here on the S&P cash weekly. You have an extension of this prior high to low swing. Okay, so again, you're still closer to resistance, and I would still have to call myself a cautious bull at this point. And also we have resistance via the S&P cash here, this 22.99 to 23.04 area. Okay, so again, when you see something like this matched up with the timing, remember, you cannot make the assumption that it's going to roll over and die. Because even though there are times where it does it in the past, because we watch for a turn maybe 65-70% of the time, you're not always going to get it, especially in a bullish market. But with that in mind, again, use this resistance to ratchet up stops if you're long. Now there's one other thing I want to show you though in the NASDAQ, and it's on the daily chart. And again, this is a reason to ratchet up stops if you're long. As far as counter trend short trades against it, I don't recommend it for anyone who's not nimble, okay, and is not maybe working on the shorter time frame charts for signals and all that good stuff, okay, because we don't know if this is going to kick in. But I will show you what I have here. I have NASDAQ cash daily chart. I have a prior rally swing of 16 days up, another rally swing of 16 days up. Today is 16 days up into a new high. We're not quite at resistance in this one. It comes in a little bit higher. And also we have a high to high cycle. 1618 in time comes in on the 26th. We have another cycle, I believe it was this high to this high cycle, 100% today on the 25th. And you have one other cycle that came in on the 24th. So we have, again, time resistance to be aware of in the NASDAQ, but not to act on unless you get a clear signal that tells you that these cycles are kicking in. Okay? Because otherwise, if you make an assumption because timing has worked in the past that it's definitely going to work again, you can get your ass kicked. And that's not something that you want to happen, right? Anyway, so bottom line, I want to give you a heads up in this next grouping of cycles in NASDAQ, but the way that I think you should use it is just ratchet up stops if you are currently long. Don't use it the other way for short positions unless you are familiar with counter trend trades and you are really quick to get out and you actually get a signal that tells you that it's worth placing a bet against the time resistance. Okay?